Hi, and welcome to the Stock Scores Market Minutes for December 12th, 2016. This week, let's talk about this concept of why trade normal. Stocks that outperform the market, those that go into strong upward trends, almost always start those strong trends with abnormal price gain and usually strong volume. You see, when company fundamentals are improving, the buyers catch on and they jump into the stock aggressively, and that's what creates the abnormal price gain in a short period of time. The best situations come when a stock goes from very normal trading activity to suddenly abnormal. So if you can imagine a stock kind of going along like this and then all of a sudden starting to go up with a big spike in volume. Now what you don't want to do is chase the stock higher way up here. You want to catch them when they first start to trade abnormally. All right, let's get into this week's market analysis. Here is a chart of the S&P 500 over the last 30 days. You can see that the market stalled at resistance. That's what we saw last week. And then this week we were able to break out through that, and the market has continued higher nicely. It isn't really a parabolic trend on this chart time frame. It's pretty linear, which means that the buying is orderly. When you go to the longer term chart, you do see that we are running away from that long-term upward trend line. We're just about at the top of the channel, so draw that a little better. So I expect that we could see another week to the upside, but we are going to hit resistance at the top of the channel soon, and that'll bring in some selling pressure. On the small cap side, the Russell 2000 has continued to surge higher ever since the election. It's been probably the strongest market going, and it continues to show lots of strength. This market underperformed the broader market for a long time, and now it's playing catch up. Remains strong, but again, it is quite far above its upward trend line. In fact, has gone through the top of that channel, which means it's overbought. You can see the trend is really going parabolic to the upside. On the Canadian side, we had some good gains this week as well. There was the break of resistance right there, and it's moved higher since. Pretty orderly again. We're not particularly overbought. We're kind of in the middle of the range. But the problem shows up when you look at the 3-year weekly chart, because we are at those all-time highs, or very close to it. And that will cause this market to stall in the next week or two, simply because people remember old highs and they sell at that price. And so I expect that we'll see the uptrend stall. Doesn't mean it's going to end, just means it'll take a little breather in the next week or so. On the TSX Venture side, we still remain in that pullback. We talked about this last week, though. It's starting to show signs of stabilizing, and if we can break that downward pullback line, we can continue higher. For now, I think it's a market generally avoided, but there's pockets of strength within the small cap and micro cap space. Just as a general sense, the mining market primarily is having trouble because of what's going on in gold, and we'll talk about that in a moment. Bond market is oversold. There's our downward trend line, and we've gone parabolic to the downside into support. And so I think we could have one more, maybe early this week, see some more weakness in the bond market, but it is going to bounce soon. It is heavily oversold, and so I do think you'll see it bounce back. And that probably corresponds to a topping out of the market in the short term, simply because you get profit taking in stocks, you get bargain hunting in bonds. You'll get a bounce back. It doesn't mean it's a change of trend. It's just that short-term stop to the trend. On the US dollar side, at the highs over here, we're basically bumping up against resistance right now. The buyers are in control. Probably eventually will break through that, but for now it's stalling. Remember, we have a Fed decision out next week, and that'll put the market into a new phase. We expect to see interest rates raised. That's strong for the dollar, but I think a lot of that is priced in already, and you may see the buy the rumor, sell the news as the dollar struggles with resistance. On the gold side, well, gold is parabolic to the downside. I've been bearish on gold for a while simply because the upward trend was broken, and now we are in that downward trend and really no support until way down here. It is oversold, which means we could get a bounce back and then continue lower, but there's no sign of that bounce yet. And so I would say for now, remain very bearish on gold until you start to see some bargain hunters come in. On the oil side, we had a good bounce back this week, but in the big picture, and this is the 3-year weekly chart, we're really just stuck inside this trading range that we've been in for a very long time, most of this year. And we're now approaching the top of the range where you're going to find resistance. If you look at the short-term chart, sorry, I don't have the short-term chart, but the short-term, 30-day, 60-minute chart, for example, this basically just shows that we're bumping up against this resistance, and we'll probably maybe a little bit more upside and then fall lower again until we can make a strong breakthrough. And on the ETF, USO ETF, it needs to break through 12, but I would remain fairly neutral on oil for now. And the fear chart, this is the VIX. It is moving to new lows, really something to avoid. There's no general move into this. It's only a short-term trading vehicle for times like this when we get little bumps. But for the most part, stay clear of trading the VIX. Overall then, so U.S. stocks bullish on both time frames, but remember, overbought, due for a pullback. No sign of one yet, just watch for it. Same thing on Canadian stocks, bullish both time frames, but coming into that resistance, expect that there will be some selling pressure. Gold, heavily oversold, bearish on both time frames, due for a bounce, but no sign of a bounce. Oil, neutral on both time frames. Stocks continued their rally this week with U.S. stocks moving to new all-time highs. They are overbought and due for some profit taking, but there's no sign of weakness yet. Canadian stocks are coming into long-term resistance, which should cause the rise to stall in the short term. Gold weak, oil at resistance. All right, let's talk about my trade of the week. And I just pulled off this trade. It wasn't a particularly big winner, but it kind of showcases some of my indicators that I use for TradeStation. There's a little pink dot right there, and that is my action candle indicator. And that is what made me want to trade this stock on Friday. It was breaking out of a pennant pattern. It's got the action candle. That puts it on the watch list. I then watch the stock for a certain kind of break. And what I'm looking for are white dots. And it's a little bit hard to see because I've drawn my risk reward line through it. But right there is my message candle indicator firing. And that was when the stock was breaking out of another little pennant pattern. And that told me that that stock was likely to go higher. So entry price there, stop here. And we had a nice little run, not a huge run, but 2.5 times risk. So 2.5 times risk, which means for every $100 risked, you made $250 in profit. So not a bad little trade, but really showcasing the indicators that I use every day to pinpoint trades using TradeStation. All right, well, that has been the Stock Scores Market Minutes. Hope you liked the video. If so, click on the like button, subscribe to the channel, tell your friends, and we'll see you next week. Trade well.